By my watch, it is 11 o'clock. And we start on time. So thanks for being here. I'm sure other people will straggle in, but we don't want to keep you all waiting for being here on time. So thank you for that. We are thrilled to have Steve Kout back. Steve is a MAPS coach. He has been a team leader. He has been a technology guru. He's been a lot of things, including an amazing real estate agent. So we're glad to have him here. And he coaches a lot of big agents, big teams in helping them with especially their profitability. So today, last week, if you weren't here, last week we talked about business plans. And now today we're talking about profit and loss. So Steve, take her away.
Profit and loss. I wonder if that's why we don't have as many people here so far as we did last week.
They're coming on.
I hope so.
Yep.
I hope so.
You're getting there.
I mean, after all, that's the whole point of this, right?
Exactly.
Yes. We're not doing this for our health.
No.
We are doing it to fund a great life.
Amen, brother.
We need to make sure that we are running our business, well, like a business, and that we are running it profitably. So I'm curious as to how many of you actually have a P&L for your business?
Look at Kevin showing off his P&L.
Ready to go.
All right.
Anybody want to admit to not having a P&L?
It's okay.
I think I saw a hand.
Everybody has to start somewhere, right?
Right. And for those of you that do have a P&L, does your P&L actually follow the Millionaire Real Estate Agent chart of accounts?
I mean, I kind of do, but not 100%.
And mine's pretty close. There's a few miscellaneous categories I've added, but I try to stick to it.
Okay, good. And there are places for pretty much everything in the full chart of accounts. And I didn't want to send it out beforehand, but I will share with Julianne afterwards the brand new, finally, after a long time, after many years, we have a brand new updated 2020 chart of accounts that can be imported into QuickBooks. So we'll share that, and you'll find places for pretty much everything you can think of in there. And then if not, you just put it in into the right place. But make sure that you don't have anything ultimately that ends up just labeled as miscellaneous, and then you don't know what it is. It's not a good way to run your business. All right. And if anybody ever has questions about where to put something and you're not sure after looking at the chart of accounts, just reach out to me. All right. I'm part of the Quan family, so just shoot me an email or give me a call if you ever need help with any of this. All right. So I am going to ask that everybody be muted when you're not talking so that we don't have background noise. However, at the same time, please be ready to unmute yourself and jump in and ask questions or make comments at any time. Just like last week, this is not going to be a lot of fun if it's just a lecture. Let's make it a conversation. So I want to hear from y'all with questions, thoughts, comments. If something isn't clear, stop me and ask me, and I'll do my best to make it clear than my first pass at it. So speak up, interrupt me anytime you want. Please don't hesitate. All right, fair enough? All right. That was interesting. Okay, so
Sorry about that. I was just playing for a second.
I'm going to suggest that we primarily use the one-page Excel sheet that was part of the that was emailed out to everybody this morning. I developed
you want
this.
me to put that up on the screen because I can do that.
Yeah, I'll go ahead and put it up on the screen here
Okay.
in just a minute, but I want everybody to go ahead, and if you haven't printed that up yet, quick print it up and have it with you. It is it's actually a working spreadsheet. You could actually do a P&L from this very spreadsheet. And I've had some of my maths clients over the years who've done exactly that. And they've ended up fleshing it out and you know, making it more robust over time. But this is indeed a working spreadsheet. And this one in particular, I created. Really, it is a training handout. So I'm going to use this and follow this and walk through how the P&L works. And we'll start that in just a couple of minutes. First of all, question for everybody. What is the purpose of a P&L?
So it's so that you can see if you're profitable or not.
Okay. Anybody else?
Keep track of your budget that you set.
Okay, two good answers.
To see if you're running your business like a business.
See if you're running your business like a business. Good answer. All good answers. Anybody else? Any other purpose for having a P&L?
See if you're losing money, where you're losing money.
Which is exactly why it's important to do it in a version built on the MREA chart of accounts, because then you can compare your actual breakdown of expenses against the models to see where you might be out of model. Anybody else? All right. Nobody mentioned taxes.
Or getting a business loan. Don't you have to show a P&L for getting money?
Yeah, business loan, sometimes even a mortgage, if you're self-employed.
Mhm.
So I'm actually okay that nobody mentioned taxes, because all too often, the only reason people are doing a P&L is in order to file their taxes. And while that is one of the benefits of having a P&L, it is not the most important one. Let's also point out something else. So it's for taxes is one of the reasons for doing it, but it's not the primary reason. Also, please do not think that the P&L is a checkbook reconciliation tool. Okay, it is not. Just because money, a certain amount of money is deposited into your account doesn't mean that it should necessarily show up in the P&L. We'll talk more about that in a couple minutes. Primarily, the purpose of your P&L is as a business analysis tool. And when you think about it, to the extent that you will use it in preparing for your taxes, remember that it's not a document that the IRS ever sees or even wants to see. Any questions about any of that? All right. So I'm going to go ahead and if screen sharing is on, yep, I'm going to go ahead and put this up on the screen. Can you all see that?
Yes.
Yes.
All right. So this is a basic, simple version of the MREA chart of accounts, of an MREA chart of accounts based profit and loss statement. All right, and it works in a very basic, simple flow. I'm going to walk through the flow of this a couple times. First at a 30,000 foot level, and then we'll go back and zoom in closer and get a lot more specific. So you will often hear, or at least sometimes you will hear of the 30-30-40 model. The 30-30-40 model says that out of 100% of your gross commission income, 30% of that is going to go towards your cost of sales. Another 30% of that is going to go towards your expenses, leaving you a theoretical 40% net profit margin, which is really a healthy business. Not a lot of businesses that you could be in that have the potential for a 40% profit margin. And
Steve, sorry, can you just repeat that, just the numbers one more time? It's 30, 30.
30, 30, 40 is the model, and those three numbers add up to 100%. So 30% towards cost of sales, 30% towards expenses, leaves a 40% net profit, NOI, net ordinary income or net operating income.
Thank you.
And by the way, the net operating income or net ordinary income, that is the line when we talk about whether things should be above or below the line, and we'll be using that term some today. This is the line that we're referring to.
So I'm curious, Steve, for those that are, I mean, we've got agents of all different size and caliber and experience. So for the ones of us that have been around for a while and we have more expenses already in our budget, that probably makes sense, the 30, 30, 40. Would you see that that's true even for brand new agents?
So for the expenses, probably yes. And if you're not spending 30%, you probably should be. The bigger place where you're going to see the difference based on where you are in developing your business is going to be in the cost of sales.
Mm-hmm.
Okay. So if you're a level 1, 2, or 3 business, which you all know from page 202 or page 273 of MREA, as well as from big poster up on the wall in the training room, level 1, 2, or 3 is either you by yourself or with one or multiple admin supporting you. When you're at level 1, 2, or 3, your cost of sale is going to be a lot less. Matter of fact, it's going to be your Kapp
And maybe
royalties.
a contract to close coordinator. Well,
Which,
that's
yeah, right.
Yeah.
Yeah. But even that, though, does not go under cost of sales.
No, it goes under expenses.
Goes under expenses. Right. Right.
What part of expenses does like a
Salaries and benefits, which is now called compensation in the new chart of accounts. And we're going to go deeper into that in just a few minutes.
Sorry, I just thought as an overall, it would be important for newer agents to understand that.
It is important. Yeah, newer agents, your cost of sales is not going to be 30%. It's probably going to be $18,000. Assuming you cap less if you aren't capping yet. So actually, when you're a level 1, 2, or 3 business, your profit percentage is going to be significantly higher than 40%.
Exactly.
Page 157 of MREA, you'll see it'll show a profit percentage as high as 62%. And in reality, I've seen profit percentages that were over 70%. Now remember, and this is very important to remember, not to misinterpret or overinflate the importance of the percentage itself. Okay? A percentage has a numerator and a denominator. Okay? And poor people focus on percentages, wealthy people focus on the denominator. That's from Ben Kinney. Right? And I think it's a really important concept to understand. Because when you're focusing on the denominator, you realize that even as your percentage of profit goes down as your business grows, the actual dollars that you have left over as profit are increasing. That's the only thing that matters, are the dollars, not the percentages. Don't get hung up on percentages. They are extremely misleading and lead to all sorts of unnecessary concern and angst in the real estate industry.
Okay.
All right. So now let's go back and break this down into a little more detail, which will then actually go back and further explain some of the things that have already come up here today, which is great. Gross commission income is the grossest, is the biggest dollar amount associated with the closing of a transaction. Okay. Let's use we'll use a theoretical example here today. $300,000 sale.
9,000.
And your side is getting 3%, so $9,000. is the gross commission income.
I'm not good at math, but I am really good at commission percentages.
We can do 3% of anything in our heads, can't we?
That's right.
So $9,000 is the GCI for that transaction. Doesn't matter if you're capped or not capped. Doesn't matter if a piece of that is going to another agent on your team who is the buyer's agent or showing assistant on the transaction. Doesn't matter if there's a referral fee being paid out of that. The gross commission income is $9,000 on that transaction. Any questions? Are you going to deposit a check for $9,000 into your operating account?
No,
No.
This is not a checkbook reconciliation tool. The amount that you deposit into your account doesn't have anything to do with how you create your P&L. One of the most common mistakes that we see, and virtually every time I start working with a new coaching client, and I mean like 97% of the time plus, hundreds of clients that I've worked with, they're not starting their P&L properly. They're just going off of what was deposited into their operating account.
You clean.
Was that a question, or I'm going to assume not? All right. Your income will be broken down into, very important to break your income down into listing income and buyer side income, which is referred to as sales income on a P&L for whatever reason. If you receive any referral income, that will go in this section. If you do any leases, that would go in this section. If you charge a transaction fee to your clients, that would go in this section. I would recommend breaking out, if you do any new home representation on the listing side, I would make that a separate income line. If you do REO business for banks, make that a separate income line. Commercial is separate.
and why do you suggest separating those out, new construction and REO stuff versus?
Because this is a business analysis tool.
Okay.
Okay, and to be able to actually figure out, is doing this new construction business worthwhile?
Got it. Same with referrals. That's why you've got it as a separate line item.
Yes, yes. And also you have it as a separate line item, because not only is it important to be able to see how well this particular part of your business is performing. If you don't separate it out, then what you're doing is you're creating more noise elsewhere in your P&L, which means you can't clearly hear the signal of what your P&L needs to be telling you.
Right.
And one of the very first things I do when I can read a P&L, I can speed read a P&L in about 7 seconds, and then deeply read it takes a lot, put a lot more time into it. But when I first start speed reading a P&L that comes across for me, one of the very first things I'm going to look at is, what's the balance of listing income to buyer side income? And is that appropriate for what this agent's business should be looking like based on the current size of their team and what level they're on in terms of the path to the 7th level? So if any other income is messed up in there, I'm not gonna be able to get a clear idea of whether or not their listing income to sales income balance is appropriate.
Steve, that referral income line, that's referring to if you send a referral out, not an incoming referral.
That would be incoming referral fee, right? Not an outgoing referral fee.
Okay.
Right. If you got a client who's moving to Akron and you hook them up with an agent in Akron who sends you a referral fee.
That's where it goes.
Right.
Yep.
Right.
Yeah, that's money coming in. All the ones up there is money coming
Yep.
in.
All money coming in. Correct.
I have
Now,
a question, Steve.
sure, Alfred, what's up?
So lease income would be property owned by the business.
Well, no, that would be if you're placing a tenant, or if any of your clients, you know,
Okay,
if you're helping to, find a tenant for one of your clients' properties. So that'd be leasing income. If for property that you're owning yourself, that should be a separate P&L altogether,
okay, gotcha.
which all of you should be doing, or at least, planning to be doing that at some point soon in your future. And then, by the way, hold on to that question. Investing is a whole separate topic that we can do another training session on at some point, Julianne. So I'd be happy to do that at some point and actually do a session just on investing in real estate.
Okay.
All right, who had a question?
Hi, this is Stacia. I'm a fairly new agent, and this is
Hey.
a great tool. I was just looking at it and understanding this is all, an example of something, meaning the 180 is an example. But
Right.
is there any reason why on a P&L that it's not broken out by month, where you're tracking your monthly income so you can see January through December versus just kind of tracking it in that one column C?
Oh, no, actually, this is just a very simplified version for training purposes. Okay, your P&L should be done monthly. And in whatever P&L program you're going to use, most likely QuickBooks, you'll be able to look at it on a monthly basis and then all the months side by side. All of that information will be there. And that's a great question. And yes, you absolutely do want to look at your P&L on a monthly basis and be able to see not only the monthly breakouts, but also the year-to-date information. So this is just for training purposes here.
Okay. And one last question. You
Sure.
mentioned QuickBooks. Being a new agent, is there a specific tool that you would suggest us to use, or we could probably work through that through our Keller Williams tool? I didn't know if you had an outside tool that you see more commonly used.
Well, there are people out there that you can hire to do MREA-based P&Ls for you. Otherwise, one of the things that I'm going to send to Julianne and Authorine after we're done is the actual full chart of accounts, which you can import into QuickBooks and start doing your P&L yourself inside QuickBooks.
And QuickBooks is super easy to
Yeah.
reconcile and to keep track, and it does create a P&L for you, monthly P&L. So it's really good. I use it.
Yeah, so that's far and away the most common would be to either do QuickBooks yourself or to pay somebody else who's going to use QuickBooks in order to do this. And then you can get all those different types of reports, including the monthlies and the monthly side-by-side comparisons, et cetera. And even year-over-year comparison reports, you get all sorts of things that will be, that it'll be able to generate for you, with just a click of a mouse. Okay. So let's get into the cost of sales or cost of goods sold. Synonyms for the same thing. Most P&Ls being done by agents who haven't taken a class like this yet are not going to have a cost of sales section, because they're going to start just with the amount of money that they deposited into their operating account. But here's where the difference really comes in. So $9,000 transaction, right? $300,000 at 3%, $9,000 of gross commission income. If you haven't capped yet, some of that is going to go towards your market center cap and your KWRI royalties. So one of the three primary parts of cost of sales are brokerage fees. And in our case, that happens to be broken out into two different amounts, both of which are capped. If you have a team member, if this was like a buyer's side transaction and a buyer's agent on your team handled it, their share of the commission would then come out under team member split. And in a full P&L, it would be broken out as to whether or not it was a buy side or listing side. And by agents, you know exactly how much money the agents on your team are making, and whether it was for buyer side and listing side transactions.
And I would like to make the seasoned agents know this, but the newer agents may not. Market center cap in Southeast is 15, not 18.
That's correct. I use this around the country. So for us, it would be that 15,000 and 3,000.
Okay.
There
So-
is.
Because of, I just have to ask, because ours is 15, do we need to put for cost of sales our MLS fees or no?
I was just getting ready to cover that. I was going to point out first that any outgoing referral fees will show up here. Okay. So if you got the lead from the client because of a referral from an agent in another part of the country, their referral fee would then come out here. And then, yes, in Atlanta, we do have one more thing that would actually be added in here, and that would be FMLS fees. We are the only market that has this issue. So I don't have it in this training tool here, but for us, that is exactly where FMLS fees would go.
And it's 0.0012% of the sales price?
That's exactly right.
Now, and then our Georgia MLS, that's included in your office bill monthly. So that's a flat fee. Does that
That's
need to be included too, or can we?
No, that goes down under education, coaching, dues. Is where that goes. That's a set amount. It's not a per transaction. It is an expense, not a cost of sales.
Okay.
Yeah. Okay, so here's the rule of thumb. Anything that is a cost of sale will be deducted on the DA and on the DA associate detail page. Anything that is a cost of sale will be deducted by the market center prior to you getting your check to go deposit into your operating account. By the way, if you caught that, I said operating account. We're going to spend a little time talking about that later on today.
I have a question about that.
Great.
So the transaction coordinator I use, they take that off on the DA.
Same way I do it. Same way I've done it for 18 years of KW. Yep.
Okay, so it's not an expense, it goes under cost of sales.
Incorrect. But thank you for asking. And I was just getting ready to cover that. So
That's really confusing.
well, so here's the thing. If it's a cost of sale, it will be a deduction on the DA. However, not everything that is a deduction on the DA is automatically a cost of sale. And there are two great examples. The way you and I pay our transaction coordinator, and for a lot of us who make a standard donation to KW Cares with every closing, that also is deducted on the DA, but that would be a charitable donation in your expenses. So great question.
So everyone does go in cost of sales, but not everything on your DA is a cost of sales.
Right. If it's a cost of sale, it'll be on the DA, but just because it's on the DA does not mean it's automatically a cost of sale. So really, for us, the only things that should end up as a cost of sale will be Kapp, royalties, splits with a team member, referral fees, or FMLS. There are other market centers around the country where if you're capped, once you're capped, you have to pay a per closing fee. We don't have that.
Hey,
Yay. So really for us, it should just be these things that you're seeing right here as a cost of sale.
Sorry, entertain me just for a second. DA stands for,
Disbursement authorization.
okay,
It's the reckoning, the financial reckoning for your closing. And by the way, and I have this complaint with every market center in the system, and I've complained at the high levels in KWRI. Every time we have a closing, we should be getting not only the cover page, the DA, but we should also be getting a copy of the DA associate detail reports.
which our office does send that out.
And if it's you, there'll be one DA and one associate detail page. If there's a team member involved, there'll be actually two associate detail pages with the closing. Now I'm starting to confuse people, which is inevitable in this conversation. Everybody okay so far now?
Yes.
Yes.
Remember, there's nothing wrong with asking a question or saying, hey, I'm confused. That's really the point of this, is to help clear things up. So please don't be shy. Okay, we're getting great questions and great comments, and the questions help explain for everybody. So if you're confused about anything or need a little more information about anything, ask me now or jump in at any point. Not a problem. Okay, so gross commission minus your cost of sales gives you your gross profit. Now, to get from gross profit to your net operating profit, we have to subtract your expenses. And in the MREA chart of accounts, there are 9 basic expense categories. And you should be able to fit everything into one of these 9. But if you need to, you can always have some additional one with miscellaneous items, but just don't ever have an actual dollar amount that's only labeled miscellaneous. It should always have a subcategory for specifically what it's for. The 2 biggest parts of your expenses will be your salaries and benefits, the compensation part, and lead generation. Those 2 items are going to account for 75 to 78% of your expenses right there.
Salaries, meaning salaries to yourself, or salaries because you have more than one employee that's supporting you?
So actually, the salary for yourself, you're going to put below the line. So it's any sort of people leverage other than yourself.
So that would be where contract to close fits in?
That would be where contract to close fits in. That would be where somebody who works directly for you, not as a vendor, would fit in as a executive assistant or director of operations, or in some cases, transaction coordinator. This is where marketing person, correct?
Virtual assistant, yeah.
Absolutely, virtual assistant. By the way, this is where you put everything, not only their basic income, but also your share of the payroll taxes, any payroll processing fees, any other bonuses or additional compensation that they might receive. This is also where you would put accounting and attorney, tax preparation. Which, by the way, is a change from the previous chart of accounts.
And then lead generation, I know you're saying it's a big part. I'm just trying to understand what that includes as far as what costs you're putting into that.
Lead generation is going to include anything associated with marketing or advertising yourself to the general public, to your database, anything to make a client happy, anything to market a listing and get a listing sold. All of that goes under lead generation. The cost of a CRM, okay? For any of you that are using a CRM other than just Command, it would go under lead generation. And actually, if you're truly doing this right, in your monthly office bill, you're gonna break out the consortium and the edge fees and put them under lead generation.
And Steve, I guess just to be clear, because we talked about salaries and benefits above, but I see in your note here, because it's lead generation purposes, the inside sales and outside sales agents pay would go here too.
That's the way I have my clients do it. And a lot of us recommend doing it that way. Some people put it under salaries and benefits, but I feel strongly that it is actually should be under lead generation. So yes.
I would difference of support versus lead gen. Yeah.
They are dedicated to lead generation. And remember, This is a business analysis tool. We want to make sure that your business is appropriately healthy and profitable. And if you're going to pay your ISAs under salaries and benefits, you're now setting yourself up to potentially make one or both of the following mistakes, which is one, to not have enough of the actual back office leverage that you need. And two, that you're going to go spend more money on lead generation because you still have room to be within model. So now you're spending more money on the wrong things. You don't have enough leverage, and you're overspending on lead generation because you've hidden part of your lead generation under salaries and benefits instead. Did that make sense, Eric?
Yes, I like that separation too.
Yeah.
Yeah.
Yes. So that would really be a key thing to keep in mind. So ISA, OSA, anything to do with listings goes under lead generation, including signage and photography and staging.
Paying for leads.
Paying for leads. If you're buying leads from Zillow, or you've got a budget for generating Facebook leads through command, that goes under lead generation.
I have a quick question about that.
Postage. Yes, go ahead, Liz.
Sorry, in the very rare case that you have to help a seller out or a buyer, and you're, let's just say purchasing a refrigerator or something like that goes here too. That's lead gen.
I say yes. I say yes. You're doing that because you're hoping that they'll still be willing to do business with you again and send you referrals.
Got it. Okay.
So yes, that is where it would go, in my opinion.
So
great question.
So
So
your gift
lead
goes
gen,
here as well, right?
Julianne first, then
I'm sorry. So your gifts go here as well?
yes, client gifts. Yes, client gifts, client event expenses, open house expenses.
I would say this is the bulk of what we spend money on.
Yes. If you think it might possibly go under lead generation, assume that it does.
Right.
Okay, go ahead. Yeah.
Since lead gen has all these categories, do you break them down further?
Absolutely. Again, remember, this is designed to print on one sheet of paper as a training handout. When you actually look at a P&L, it will absolutely be broken out, and it needs to be. You need to know exactly how much you spend on everything. Okay, if you're buying leads from Realtor.com and Zillow, they should be separate line items in there. That is how you play red light, green light, which in MREA is the process of holding your expenses accountable to a return on investment. So you need to know exactly how much you're spending on each and every different little thing. It absolutely gets blown out into a lot of, these are the primary categories, but then there'll be subcategories and subcategories, and it's going to go all the way out so you can see exactly what every penny was spent on. Nothing is lumped together, and nothing is left as miscellaneous. It's always going to have an actual category or subcategory name to let you know where every penny actually went. Any other questions so far? You guys are asking great questions, which shows you're paying attention, and I appreciate that.
Hey, this is serious business.
It absolutely is.
It is our business.
It absolutely is your business, and this matters. This absolutely matters. So doing it right and doing it monthly are key parts of you actually running a business. Okay. So the other expense categories are more or less self-explanatory. And when you see the full chart of accounts, you'll see a lot of the breakouts of where things go. So you'll be able to read through that later on. So I'll send that, it'll get sent out to everybody here after we're done today. So occupancy has to do with, office space, either in the market center or elsewhere. Education and coaching also includes dues.
So they've increased this. It used to be much lower, but they've increased it to 5%.
Yeah, it was way too low before, and we're still able to keep it in at the overall rough 30% expenses. Some things in the old chart of accounts were too high, and some were too low.
So FYI, folks, this is where mega camp and family reunion and bold and
Correct.
classes that you would take online and yeah. What about the travel for those events once we finally get to travel again?
Put it there. Part of your education and coaching.
So if I go to family reunion and I eat out and I fly there and I get an Uber, every dollar spent at family reunion, all of it, education coaching.
Yeah. They're all tax deductible business expenses.
Okay.
The meals are 50% deductible. But yes, that's really where it should all go. Yeah.
You're saying dues go here, like NAR dues?
Yeah.
Okay. And then earlier you had said, I think Georgia MLS would go here. Is that right?
Yeah, Georgia MLS have what is it, $20 a month?
Yeah.
10,
So
whatever goes there. Yeah.
So on that note, we get like the one monthly office bill. So we should be taking that itemized.
You should actually, to truly do this right, you should be exploding it out. And in QuickBooks, you can set that up one time and it'll automatically take each dollar amount and send it to the right category. Because consortium and edge are lead generation. E&O, it goes to insurance, obviously, etc. Communications and technology, that's where you'll put cell phone, internet access, etc. Automobile, I like to try to stay away from in this conversation. It's really, you should be talking to your accountant about how they recommend you best handle automobile expenses for tax purposes. I will tell you that the safe general advice for most people is that you're best taking the mileage and put an app on your phone that'll track your mileage automatically. Every time you drive somewhere, it'll calculate it and then ask you at the end if it's a personal or business. So with just, one quick swipe left or right, you've got your mileage tracked automatically. And that's generally the best way to go for most agents. All right. So then ultimately what we end up with, gross profit minus all of our business expenses, will lead us to our NOI, our net operating income or net ordinary income. This is basically, that's your pre-tax salary from your business. That's your pre-tax business profit.
Before you pay yourself.
Before you pay yourself. Yeah, that's the profits of the business that now become ready to be moved over into your personal life. And we'll talk more about how to move that money over into your personal life here in just a minute. Other income. I note profit share on the side here because if you're going to put profit share in your P&L, make sure you don't put it up top, which is another mistake that we see all the time from agents. Your profit share doesn't need to be on your P&L at all. It's actually a separate business with a separate 1099. If you want to put it on here, you can. There's a place for it in the chart of accounts. Doesn't need to be, but if you're going to put it on, make sure it goes below the line. And then other expenses. This is where you would show any salary that you're taking from the business. So how many of you are incorporated? Is there anybody not incorporated?
Some of the newer ones probably aren't yet. It's our conversation moving forward as soon as they've got a piece of business. So there's other things they're focused on first.
Fair enough. So real quick, for, you know, I'm not an accountant or tax advisor, so you always get professional advice on this, but pretty much always the right answer is going to be incorporated as either an S corp or an LLC. Either one is fine. They're basically the same. LLCs file taxes under subchapter S. So they file taxes the same way. These types of corporations do not pay business tax. They are pass-through entities. So they will have a zero tax liability every year, and all of the tax liability then flows through, passes through to us personally. So we pay our personal income taxes and payroll taxes, but there are no business taxes being paid. So how do you actually move that money to yourself? Well, the best suggestion, and there's one legitimate exception to this maybe for some people, but the best suggestion is to pay yourself a reasonable salary as a W-2 on a W-2, and then take the rest, hopefully the larger share of your profits in the form of a K-1 distribution. The reason you do that is because the amount of your salary is the amount that you're going to be paying payroll taxes on. And if you're not doing it this way, then you're going to be paying payroll taxes on all of your income. So this way, if by chance you and your accountant decided 60,000 was a good salary amount, then you'd only be paying payroll taxes on the first $60,000 of your income, not all of your income, which can amount to several $1,000s a year savings.
Which is one of the reasons why you want to get incorporated.
Yep. And another reason is, as a incorporated pass-through entity under the new tax code, 20% of your pass-through income is exempt from federal income tax under the new tax law. That's another significant savings.
Can you say the other portion should go in? I missed that part. You said you came up with the 60,000. You said the other second place to put it is what again?
Is as K-1 income. K-1 is a profit distribution. So your income in this case gets reported to the IRS via W-2 and K-1.
And I think it's important to mention here, Steve, that we're setting ourselves as a paid employee. So we're getting a set amount. And once in a while, we're giving ourselves distribution, but we're not sucking that net income dry, because we need to have income for the business so that it can buy equipment, so that it can invest in more advertising, right? So you need some operating capital, and that's going to come out of your net income.
So let's talk about that. That's a great transition here to something else that I think is very important for us to talk about today, which is your actual setup with your bank. Okay, and how many different bank accounts you have and how you're using them. All right, some basic financial systems here. You should have an operating account for your business. And when you actually incorporate, you'll actually use that name and that EIN number with that bank account. There'll be a checking account. You'll have an operating account, and whenever you get a check from a closing, it gets deposited into your operating account first. And all of it gets deposited into your operating account. And then you pay all of your business expenses out of that operating account. If you're going to use a credit card, you should have a single credit card dedicated to all business expenses and only business expenses. If you swipe that card, it's because it is an allowable business expense for tax deductions, for tax purposes. Always use that card for that and only use it for business expenses. It will make handling your finances dramatically easier. Now, since we live in Atlanta, I use the Delta American Express for mine. So use a good affinity card where you're going to rack up, you know, benefits like that, but keep it clean. Okay, now, your operating account is not the only business account that you should have. You should also open up a separate account at the same bank for business reserves. And that business reserves account should have at least 3 months worth of your operating expenses, okay? Sitting in a business reserves account. So that if you hit a dry spell, you can still cover your business bills. So you should have, you know, you'll end up having, you know, 1 to 2 months worth of float in your operating account, as well as 3 months sitting in a separate business reserves account.
And that's so important as commission salespeople, because we do go through ebb and flow, and we have to have those reserves.
This is so you can sleep at night.
Exactly.
So you don't have to worry about having to let go of a great operations person because you didn't handle your money well.
And that's checking, right?
The reserves account would not be a checking account.
Okay,
It would be a savings account.
okay,
And then you can just move money back and forth online. And until that savings account is built up to 3 months worth, you should be putting a piece of every closing, moving a piece of every closing from the operating account into that reserves account until it's fully funded. Now, if you think about it, you should really be operating your household along the same lines. You should have a household operating account and then other accounts for everything else, including a household reserves account where you've got your, so you can sleep at night, money sitting there. And most people recommend that you have at least 6 months worth of household expenses sitting around in easily accessible cash on hand. And then whatever you save above and beyond that, that's the money that you put to work for you by buying investment real estate and in the stock market, et cetera. And so how many of you have already paid some of your 2020 taxes via monthly or quarterly estimated payments? How many of you have not?
Report is being, my quarterly statements are being mailed out today.
All I can tell you guys is do it.
Amen.
Yes,
Okay.
you should be doing one or both of the following things. You should have another account specifically for escrowing your taxes. And or you should be taking most, if not all, of your monthly salary and just having that applied to your taxes. That's actually what I do. I take a salary of $48,000 a year, and that's $4,000 a month. That whole $4,000 goes to Uncle Sam and Cousin George. So that covers a large part of my taxes automatically every month. But you have to think about it this way, okay? And this is why you need to have a separate account for taxes. So anytime you move money out of your operating account into your personal life, you should be taking 30% of that amount and automatically sticking it into your tax escrow account. Notice I keep using the word escrow account, okay? We have to treat that money the exact same way that we would treat a buyer's earnest money or a tenant's security deposit. What do we never do with those monies? What's the legal word that we never do with those monies?
Commingle.
Commingle, exactly. Do not commingle your tax money with your personal funds. That money is not yours. It is Uncle Sam's and Cousin George's. It just is, okay? Take that money and immediately bifurcate it, separate it out, put it into an escrow account so that you can pay your taxes, income taxes and payroll taxes on time, which means no less than quarterly. If you're not paying quarterly, you're going to end up paying some unnecessary additional fines.
So Steve, for example, we just have like, okay, any bank, Wells Fargo, whatever. So you just add another little savings account right next to the other ones.
Yeah.
Just for that, right?
Yes. You can open up as many accounts as you want. They're not going to charge you anything.
Right.
You open up accounts and you name them online, and I log into my bank online. I can see how much is in my operating account, how much is in our household account, how much we have in reserves, how much we have in an account that's now titled wedding. Now that we're past college and we have wedding expenses instead, we have one that's now used to be called college tuition. It's now called wedding. Okay, so we have all these accounts and we can see them, and they all have names. So we know exactly what the money in each account is for. That's how you need to be doing it. You
So
need
to be
have
clear,
yeah.
So like, let's say anybody getting started, right? So high level, we're talking a minimum, what sounds like what, 3 accounts?
I would say 5. Now because I'm talking about the personal also. Okay, just to make it clear, yes. So from a business standpoint, operating account and operating reserves. Operating account is checking, operating reserves is savings. On the personal side, you'll have a household operating account and a household reserves account. And then kind of floating in the middle of them, that's going to be unfortunate. So I'm not going to use my fingers now. Is your tax escrow account.
Well, we'd like to use that.
I guess that is the appropriate finger.
When paying those taxes.
Is it
What was that?
I use it whenever I send that check.
Is the tax account set up underneath your business account or underneath your personal accounts?
Underneath your personal accounts, technically, because you're only paying taxes as an individual. Your corporation, your company does not pay taxes. But I would make sure that whenever you move money from your business, from not your business to your personal life, that you automatically are moving an appropriate amount of that immediately back into your tax escrow account. If you need that tax money to pay your bills, you're living above your means. You are still going to have to pay those taxes, and they'll get a lot more expensive if you're paying them late. So unless your financial world is so complicated, which for pretty much all of us, we're not, there is zero reason for you not to be paying your taxes in full on time by April 15th every year. No extensions. By the way, you do know that if you have an extension, you still owe all the money by April 15th. You don't actually get extra time to pay. If you pay late, they will charge you, even if you have an extension.
Yep, I learned that the hard way this year.
Yeah.
Thankfully, it was July 15th.
So you stem the bleeding quicker. But yes, it's bleeding. That is a hole below the waterline in the side of the boat.
I've gotten to the point where I want mine turned in long before. And that way it's just done. So I don't have to worry about it. So I know by the 15th, everything's taken care of.
Yeah. You know, if you're doing it right, you'll have somewhere between a small balance due and a small refund every April. And if you do it through your payroll, the W-2 part of your income, then you can just do it as a standard payroll deduction where it's coming out every month. And that makes it the easiest. Otherwise, if you do a quarterly, make sure you know when the quarters end because they're not logical. 2 of the quarters actually end 30 days earlier than you think they would.
FYI, I just got a notice that I no longer have to file monthly, but quarterly for my payroll taxes, which I thought was interesting. Just got it like last month, that based on new laws or something like that. So I don't know if it affected anybody else, but because I was paying every month, and now it says I only need to do it every quarter. So Anyway,
Not aware of that. Interesting. Okay. Any questions about being incorporated, handling your taxes, and what your basic financial system should look like or be a, you know, a logical variation of those 5 accounts that we talked about? Any questions here? No? Everybody's
a
following
question.
this.
I
Okay,
just
great.
have a question about whether or not, which platform you use. QuickBooks. I know this spreadsheet you can use, but do you prefer Quicken, QuickBooks? And do you
QuickBooks.
and do you put your
QuickBooks.
household in that as well, or do you keep it separate?
My wife handles all of our financial stuff, and she does it at a really high level. She's got some amazing spreadsheets built out and all of that. So I'm not sure if we're doing the personal stuff through QuickBooks or not, quite frankly. But general recommendation would be, yes, use that. Definitely for your business. And again, that chart of accounts spreadsheet that will get sent out later is designed to be imported into QuickBooks so you can do your P&L very easily.
Okay, thank you.
All right. There are some real nice tax benefits to owning investment real estate, which, like I said earlier, Julianne, we could do as a separate training session for the market center sometime soon. But I'm just bringing that up again now. This is based on the conversation we've been having, just remembering that because we're in real estate, we can depreciate our property without passive loss limitations. So by owning real estate and taking your depreciation properly on real estate, we can save a lot of money in taxes. The rest of the public is subject to passive loss limitations. We are not. We are full-time in real estate, so these are active losses, not passive, and no limitations on them. So another one of the big benefits of owning investment real estate. Which really brings me to the last thing that I wanted to make sure that we talked about today. As long as we're on P&Ls and being incorporated and paying taxes, this is all about making money, right? And what's the single best way to actually keep score here?
Track your net worth.
There it is. When is the last time you actually properly tracked your net worth? I mean, accurately, not estimates, not guesses.
Last night.
yeah,
Nice.
my husband and I have been working on it in the last couple of weeks. So it's exciting when you're doing it right.
It is.
Adding up.
It starts at the more often you do it, the faster it grows because it just keeps you aware and you make smarter decisions, the small little decisions on a daily basis that will add to it. Teresa updates our personal financial spreadsheet every single week. So ours is done weekly as well because it includes a to the penny net worth section in that spreadsheet.
Can you
Also use an app called Mint, which I find to be very user friendly.
Mint is great. I recommend Mint all
From
the
both of my
time.
accounts, and it really
Yeah.
is a great tool to kind of keep you on track on
Yes.
expenses. If you have your business account tied into it, it shows you where that is. It even tells you your net worth from what your house is worth. So it's a good way to kind of know where you stand on your.
Yes, it'll look at most, if not all of your various accounts and loans and get the actual up-to-date balances.
Correct. I use it for everything, and it really is a good tool for me to keep track of on a monthly basis.
Occasionally, you know, you want to update the actual value of any real estate that you own based on a new CMA. You go in there and see how little your car is actually worth by updating it through, you know, Kelley Blue Book or Edmunds online. A few things that you need to look at, you know, manually, but for the most part, Mint and other systems like that are fantastic ways to look and see how much money you actually have in all of your accounts. By the way, I would say that when you're tracking your net worth, any money that you have in a business reserves account, I would go ahead and count that as an asset. I wouldn't count the money in my operating account, but money in your reserves account You know, you never need the reserve. Someday you'll take that money out. It is your money.
Hey, Steve,
Do
real
not
quick.
count the money in your, do not count the money in your tax escrow account though, right? Okay, yeah, go ahead.
Sorry. So, Daisha, I'm glad you brought up the Mint because I've been using it a little, but I'm not good at it right now. And I've just really, I need to get into it more because I do like it. So is there a P&L component to it where it's not like duplication of effort, meaning, you know, kind of one-stop shop kind of thing? Or we still need to do this.
No, because it's very different. Mint is going to track your net worth. It's really about your personal finances and your personal life.
Yeah.
Not this. This is P&L is P&L is the not you part of your finances. Mint is going to be for the you part of your finances.
Makes sense. Okay.
Yeah. And yes, you should be updating your net worth. If you haven't done it in a long time, do it. And when you do it, okay, let's face it, it's a little different than the way you might do it if you're applying for a loan. Okay, be extremely realistic. Do go in and actually look and see what your car is actually worth online, and remember that it's not in as good of a condition as you think it is. Your furniture probably shouldn't be on there at all. If it is, remember, don't value it any more than you could sell it for in the first weekend on Craigslist so you could get out of town one step ahead of the law, okay? It's not worth anything. And any jewelry that you have that you wouldn't sell, don't count it. Be very realistic about your assets. And be very comprehensive with all of your liabilities. Mortgages, car loans, student loans, private loans, etc. And then start keeping it updated and looking at it. The more frequently you do so, it's amazing how much impact it'll have. And as you see it start to trend in the right direction, man, it feels good. And it will trend in the right direction faster as a result of paying attention to it. Make Diana proud here. What you focus on expands.
Steve, you just made Einar's day. He's sitting here listening and he just hit me and said, see, Steve said I should be checking because he checks where we are in the stock market every single day and it drives me crazy.
I do the same thing, buddy.
Good. I want to know where we are.
Yep.
Oh, leave it alone.
Yep. I am checking my stock accounts and even my a little bit in crypto. I check those accounts as well every day. Can't help myself.
It's good to know where you're at.
You got to know where you're at. Absolutely. All right. Any other questions, thoughts, comments, anything else you want me to clear up or explain better?
I have a question. Can you give us any tips, the best way to track this consistently? I mean, after every closing or as soon as you spend something on a client or marketing, I think that's where it's easy to get behind and then have to go back for a lot of things. So if anyone has any suggestions on a good practice for that, I would appreciate it.
You should be tracking your income after every closing by updating your income and cost of sales numbers from the DA and the associate detailed report. And the expenses should be done once a month. Right at the beginning of the month, you should have a new P&L at the very latest by the third week of the following month.
Okay.
And if you're doing it yourself, you should really have it within a week of being into the new month. And again, when you're running everything through one operating account, one dedicated credit card, it's a lot easier. Who else? Anybody else?
This is really helpful. Thank you for today.
My pleasure. Glad to do it.
it's always good. I think I know this stuff, and yet every year I listen and I glean something else. So I think I'm getting to be more of a master at it each and every year. So, perfect practice makes perfect, right?
That's one of the reasons why I like teaching it for the Market Center every year, because it keeps me sharp and better as well. And I learn new things from my coach and in other ways throughout the year that I add in here. And a lot of things I'm talking about are because I've made the mistakes in the past, so yes, teaching it and taking it again and again help us continue down the path to mastery.
Plus the newer that you are, it's overwhelming. And the more you get into the business, the more each piece starts to make more sense. So,
and the earlier you start when it's nice and simple, the easier it'll be to build things out as your business grows.
amen to that. Yeah. Start doing it right the first day.
Hey, Steve, thank you so much. This is Patty sitting
Hey,
behind,
Patty.
hiding back here. Anyway, my big aha today was putting my salary below the line. I have not done that before. And even with the, going, using a CPA and everything. So that is really helpful to me.
It just helps you see how profitable the business actually is. It's separating some noise out so you can get a clear signal about the health of your business. Yeah.
On that note, I think you guys should realize that all CPAs are not the same. Like, it's really helpful to have someone that knows this business, especially if you're getting into like investment properties.
Yes, that's true. And for my MAPS clients, I do bonus calls with their accountants. And whenever I start working with a new client, within the first month or two, we're doing a bonus call with their accountant so I can explain to their accountant why the MREA chart of accounts works the way it does. And they all like it. They're all good with it. It just, once they understand why we do it the way we do. Yes, you got to work with people who actually understand what you're doing. And yes, not all accountants know investment real estate that well. They don't know how to properly depreciate and bifurcate, and that does make a difference. All right, anything else, or we're going to give everybody a few minutes of their day back?
I think we are. Steve, thanks again for your time. We really appreciate it. And as he mentioned, if any of you have any specific questions, all you have to do is email, I think it's Steve Kout at KW, isn't it?
That's it.
So Feel free to email him and he'll be glad to answer. This will be put online. Thanks to Kevin. We'll put it on our YouTube channel so you can review it again. And don't forget to take a look at those forms and start filling them out for yourself, okay?
I'm going to send over the full new chart of accounts now.
Awesome. Thanks so much, Steve. We appreciate your time.
All right.
Thanks, Steve.
Thanks, y'all.
Thank you, Steve.